An asset is a resource of economic value that a person, organization, or nation possesses or controls in anticipation of future profits. Cash is a secure asset, but inflation makes it a terrible investment. Inflation can be defined as the rate at which a currency loses purchasing power and its value. Recent events, such as the COVID outbreak and the ongoing conflict in Ukraine, have resulted in persistently rising inflation rates, prompting people to seek out means of protecting their hard-earned money. In this practical wisdom video, we will examine 10 assets that are always superior to cash. Number 1. Land. Land is categorically and objectively an appreciating asset for two simple reasons. Each year, the world's population increases exponentially, and only a finite amount of suitable land is available for habitation and use. It is impossible to create new land, making it a highly desirable commodity. As a result, the most fundamental economic theory of supply and demand dictates that land's value will inevitably rise as demand for the limited asset increases. It is no longer a question of whether land will increase in value, but by how much. Diversification of investment portfolios is one of the most compelling arguments for investing in land at the present time. As a hedge against market risks, investors have begun to increase their land holdings because returns are generally stable and have low correlation with other asset classes. Consider the case of Bill Gates. In January 2021, according to the Land Report, Bill Gates amassed 242,000 acres of farmland across 11 states, making him the nation's largest private farmer. This statement from one of the world's wealthiest individuals speaks volumes about the value of land as an investment. Land is an excellent inflation hedge, as annual price increases in the United States are at their fastest rate in nearly 4 decades. Number 2. Stocks. Stocks are financial instruments that represent a portion of ownership in a company with the expectation that it will grow and generate profits. The majority of company portfolios are heavily weighted in equities, which tend to be more elastic, making stocks resistant to inflation, major conflicts, and natural disasters. Investing in the stock market is a long-term proposition. A good rule of thumb is to diversify your investment portfolio by investing in different industries so that a decline in one industry does not wipe out your entire portfolio. Investing in index funds, which track a benchmark index such as the S&P 500 or the Nasdaq 100, is another option. When you invest in an index fund, your money is distributed across all of the companies that comprise the index, resulting in a more diverse portfolio than if you had purchased individual stocks. Putting money into an online investment account, which can then be used to invest in stock shares or stock mutual funds from around the globe, is one of the best ways for novices to begin investing in the stock market. Number 3. Real estate. Despite rising interest rates, real estate remains one of the best opportunities for small businesses and individuals. Indeed, real estate is an excellent investment and asset. Investing in, purchasing, maintaining, and eventually selling investment property is typically a safe bet. Real estate, like land, always appreciates over time. As a tangible asset that can be passed from generation to generation, owning real estate provides both dependable income from monthly rental payments and the opportunity to build generational wealth. Real estate can be used for commercial, residential, industrial, and special purposes, and is typically employed for the establishment of social amenities. Number 4. Cryptocurrency. Cryptocurrencies are digital currencies that are sweeping the globe as an increasing number of people move in this new direction. As of mid-May 2022, one Bitcoin is estimated to be worth approximately $30,000. Bitcoin is the most popular cryptocurrency. Bitcoin is gaining in popularity due to its decentralized nature and limited supply. Altcoins, which are coins other than Bitcoin, such as Dogecoin, Ethereum, and Polkadot, to name a few, are also worthwhile investments. Governments are gradually adopting and accepting digital currencies, as evidenced by U.S. President Joe Biden's signing of an executive order to examine the environmental impact of mining digital currencies and enact regulations to prevent their use by criminals, terrorists, and money launderers. In addition, Biden urged the government to investigate a proposal to create its own digital currency. While a digital dollar would be less volatile than Bitcoin, the mechanics of its use would be identical. Similar to crypto, A government-backed digital coin would almost certainly use a ledger and digital wallets. Number 5. Art. Have you ever wondered why wealthy people purchase art? It's not because they enjoy the product, although the majority do. According to the Wall Street Journal, the art market is one of the hottest markets on the planet, and contemporary art prices have outperformed the S&P by 174% from 1995 to 2020. In addition, it has a very low correlation to all major asset classes, making it an effective diversification tool. In addition, the total wealth held in art is estimated to be worth $1.7 trillion, and Deloitte forecasts that it will increase to $900 billion by 2026. The only issue with the art market is its high entry barrier. Unlike you, I do not have millions of dollars to purchase a painting. As a result of today's sponsor, investors such as myself and you can now invest in the top-tier art market. Masterworks has established itself as the preeminent art investment platform, leveraging technology and finance to give anyone the opportunity to invest in multimillion-dollar works of art by Banksy, Picasso, and Basquiat. Masterworks allows investors to purchase shares that represent an investment in art. Since 2020, Masterworks has sold 3 paintings, each with a net IRR of over 30%, and their new offerings typically sell out within hours. As with any investment, your capital is susceptible to loss. Your portfolio's value can decline as well as rise, and you may receive less than you invested. To add these assets to your portfolio, simply create an account on the website using the link provided below. After that, you can peruse their art selections and purchase any of their current offerings. Exactly as you would trade stocks on your mobile device, you can do so on Masterworks. You can then either hold on to your shares until Masterworks sells the painting or sell them on the secondary market. Join the platform immediately and bypass the waiting list by clicking the link in the description. And as always, proceed with caution in all investment-related matters. Nothing is without risk. Number 6. NFTs. NFT are a highly controversial and debatable asset. Few people are aware of their worth, value, or even purpose. Nevertheless, some NFT have been sold for thousands or millions of dollars. Therefore, I believe it is worthwhile to investigate, especially in a future where you will likely encounter many of them. According to Wikipedia, a non-fungible token is a financial security made up of digital data stored in a blockchain, a type of distributed ledger. Non-fungible tokens, NFTs, are gaining traction as a lucrative investment option. Small inventors, crafters, and artists are currently making millions of dollars from the sale of a variety of artistic and creative items that fetch exorbitant prices. Some of the astounding artworks being auctioned off for $11.75 million, with bids beginning at $2 million. The most popular NFT collections include, among others, Bored Ape Yacht Club, Doodles, and CryptoPunks. This opens up the possibility of owning something on the internet, which can be a game changer in terms of copyrights and royalties. Noting that NFT rely on the law of supply and demand is essential. Thus, supply is contingent on whether or not individuals are willing to pay. Important information about NFT is that they can record ownership of any asset in a permanent and verifiable manner, something that was previously inconceivable, which makes them extremely tradable. With the emergence of digital worlds such as the metaverse, it will be possible to own permanent land or art for use in the metaverse. Number 7. Precious metals. Precious metals include gold, silver, and platinum, among others. Prior to the current global fiat monetary system, the majority of currencies were backed by these precious metals. For many centuries, the world followed the gold standard, which permitted people to immediately exchange their money for gold. A nation that adhered to the gold standard fixed the price of gold and purchased and sold it at that price. This fixed price determined the worth of the currency. This system, known as representative money, was discontinued following the Great Depression. However, because these minerals are produced in limited quantities each year, these metals are valuable. Their value derives from their scarcity. The most refined strategy for investing in precious metals is to purchase the metals themselves. Bars and coins of gold, silver, platinum, and palladium are sold by coin dealers all over the world. However, their prices fluctuate based on market supply and demand. Purchasing shares of companies engaged in the mining and production of actual metals is an alternative method of participation in the precious metals markets. When metal prices increase, these stocks tend to increase, and when they decrease, they tend to decrease. Those who invest in mining stocks face additional risks in addition to the price of the metals. Number 8. Vintage cars. Collecting classic automobiles is becoming increasingly popular. Can you envision your old muscle car, German coupe, or British roadster serving as a weekend cruiser and generating income? Many other types of investments, such as collectibles, art, furniture, and jewelry, have outperformed antique cars. However, if you have the right vehicle and the right buyer, classic cars can be a lucrative investment. Number 9. Luxury pieces. From high-end watches and jewelry to the most expensive wines and spirits, rare and luxurious items are a tremendous asset. However, a significant amount of knowledge is required to select investments that will yield a favorable return. You've probably seen many celebrities carrying Rolexes, Patek Philippe watches, and Hermes Birkin bags. These valuable pieces are included in their extensive collections. Some pieces, such as the Audemars Piguet watch, fetch nearly 10% per year, which is significantly higher than the S&P 500's annual return of 8%. Number 10. Bonds. Bonds are an excellent source of income. Bonds are nothing more than promissory notes. It allows you to lend money to businesses, local, state, and federal governments. Bonds provide investors with much required predictability in the face of uncertainty. Bonds are generally secure financial investments that are frequently used to balance a portfolio, particularly in comparison to the volatility of other assets such as stocks. Bonds offer fixed-interest long-term investment opportunities. Bonds are known as fixed-income investments because bond payments are typically fixed and can provide investors with a consistent cash flow. Bonds are popular among investors due to their potential for profit. The global bond market is larger than the global stock market, thus increasing its profitability. What I've just shown you are some assets that are superior to cash, but deciding which one or ones are best for your portfolio will depend on your research, personal preference, and financial advisor. Numerous successful people employ the strategy of investing in income-producing assets or assets that generate cash flow, and diversifying your sources of income is one of the most effective ways to build a financial cushion. Having said that, have a good day and I'll see you in the next video.